Bonjour, this is Marie Conser. I'm a real estate agent in Portland, Oregon, and in today's episode, I am interviewing Tim McBratney from Pacific Residential Mortgage to talk about how the lending criteria may have evolved through this crisis. Hi, Tim.
Hey, hello, Marie. Nice to see you again.
Do you want to introduce yourself?
Yes, indeed. Tim McBratney with Pacific Residential Mortgage. We are a locally owned and operated residential mortgage lender. However, we are represented in multiple states throughout the country now.
Okay, wonderful. So Tim, since this coronavirus crisis started, there have been a lot of changes, or at least adjustments, in the lending industry. At the very beginning, at the very onset of this pandemic, we saw the interest rates, for example, being very volatile. It feels like they have stabilized a little bit, for example. But we have also heard about jumbo loans not being available anymore, which is not quite true. And we have first-time homebuyers who are concerned about lending. So can you give us an overall picture about interest rates, lending? Where are we at? Are you still providing loans for people who wish to buy a home today?
Yeah, that's a great question, Marie. Indeed, the market turned a little bit more conservative when the outbreak of the pandemic was getting started. And however, the traditional old-fashioned loan products that have been around for decades were still available. But products like jumbo financing and some of the hybrid or unusual type of financing, a lot of those products did dry up. The ones that remained are typically ones that are insured or backed by the federal government, such as FHA and federal VA loans, and Fannie Mae and Freddie Mac are still available and in full force.
Okay, great. So that's very encouraging for people. What kind of changes you may have seen, for example, beyond some products that have gone away? Beyond that, what kind of changes have you seen, maybe in terms of down payment or credit scores requirement? What have you seen that may have changed or maybe tightened?
Yeah, that's another great question. So indeed, perhaps out of fear of people losing their jobs, FHA, for example, did tighten their lending criteria. They traditionally can go as low as a credit score of 580. However, that tightened up to 680 and above. However, the good news is that has all started to loosen back up again, and we are doing FHA financing with scores as low as 640. And we are seeing that jumbo money is starting to loosen up as well. In terms of down payment, we still have had the traditional 3% down product for first-time home buyers through Fannie Mae and Freddie Mac, and FHA has still been viable at 3.5% down. So the low down options are still out there.
Oh, that's good news. And if you are on a jumbo loan, do you have to have 20% down now?
Yes, that program has definitely tightened up. That money is typically funded with private investors, and they got pretty skittish, and a lot of them exited the marketplace entirely. However, they are back and sticking their toe in the water, but they do want a really clean, strong borrower to lend to at this point. That might continue to loosen up as we learn more about COVID and the pandemic and the curve that we've all talked about. Hopefully that is on the downward trend. So that will continue to loosen up, I'm sure.
Okay, good to know. So, and we have to remember that credit scores are one piece of a bigger puzzle. And when you're looking at a borrower, it's the whole picture that you're looking at, right?
No question about it. Yeah, absolutely. We look at income, and that includes job stability. So we are doing a verbal verification of employment on the day that we fund a borrower's loan. So we're just making sure, are you still employed? We certainly look at assets to close. That surprisingly hasn't tightened up as much as one might have thought. In other words, lenders like to have a little bit of money left over after a borrower closes their transaction, and I've not seen any changes there. But we also, of course, look at credit, and good credit score always matters. So, certainly keep your credit scores clean and above 600 if you can, 640 preferably, and in order to get good rates, above 700 if that's possible.
Okay, sounds good. Now, you mentioned several times job stability, people who may have been furloughed, etc. So there's a lot of that going on with what happened during the pandemic. Some people have completely lost their jobs, so their home buying project may be on hold here until they find a job and the economy opens up again. People who have been furloughed, though, and you and I talked about that before, but the people who have been furloughed, that does not mean that it's completely, that it's postponed indefinitely, right? When they go back to work, you don't need to wait that long in order to get approved again, yes?
That's correct. Yeah, it's what I've seen more commonly is a reduction in hours. So perhaps working 20% reduction in hours or even greater. And as long as they still qualify, we're still lending to those parties. But I actually have a few customers right now that are waiting for a spouse to go back to work. And our policy so far is really just to have that first pay stub after they're back to work. And so, traditionally it's going to take a couple of weeks to get an appraisal and a title policy anyway. So by then, hopefully, by the time they're closing their transaction, we will have had that first pay stub. So
Okay.
That part is not as dire as maybe people believe it is.
Okay, good. So what I'm hearing you say overall is it's not because you're in that situation that you need to pull the stop on everything. Of course, if that's your preference, absolutely, we respect that. But if you had a plan on buying and you're now wondering, or you feel that those new situations are just preventing you from doing it, before making that decision, inquire about where you're at. How do you fit into the updated criteria for a loan so that you have all the information in your hands to make an educated decision? That's what I'm hearing you say, right?
Absolutely. Yep, absolutely. For sure. Get a meeting set up with a lender and let's discuss your unique situation. And I think very good chance it won't be as dire as you imagine it may be.
Thank you so much for taking the time to speak to us today. There's a lot of information on the internet, and what I'm hearing you say is basically talk to a lender. Everybody's in a unique situation, and in order for you to know exactly where you stand and what you're able to do in this moment, it's by talking to somebody, a professional. So do you want to add anything?
No, I like what you said, though. I think, a lender with a lot of experience will certainly try and find a solution to your goal of buying a home or refinancing the existing mortgage. And by all means, please talk to a lender and let's see what we can do for you.
Well, thank you so much, Tim. I apologize for the quality of the sound here. It was not all completely good, but we appreciate you sticking with us and listening to the end. Thank you so much. Call us if you have any questions. Bye-bye.